use moving averages within my strategy. I use one moving average. You can use two to cross over, and I'll show you how that correlates with each other. I'm also going to show you within this video how you can use the tips inside of the Candlestick Bible in reference to the moving averages. So what is a moving average? A moving average looks like a little squiggly line overlaid on top of price, right? So these is representing candlesticks. You might see something like this here, right? The moving average is moving along with the trend of the candlesticks. Now, depending on what moving average that you use, okay, it might be close to the candles, right? And it might be away from the candles. It might be on top of the candles. It just depends on what type of moving average you're using, right? So price, as we already know, price zigzags through the Forex market, guys. Price moves up, it moves down, it moves sideways. Okay, so the moving average itself is actually taking the average of the last number of candles depending on what moving average you're using. I personally use the exponential moving averages, which is my preference, right? Because it accurately represents recent price action. So we're looking at the Euro USD and we're looking at price over here. I want to know, you know, going back this many candles, what was the most recent trend? Because as a trader, I want to see what's happening now as opposed to what happened a few months ago, a few years ago. That's like irrelevant to what it is I'm trying to do now. So exponential itself puts more emphasis on what's been happening lately, right? You may see the word simple moving average that moves along with the overall trend, okay? It takes an average of the overall trend. Exponential takes the actual average of what's going on lately, okay? So that's the difference between the two. So let's actually look at the charts right now. Okay, I'm gonna go back in time. I'm on a 1 hour time frame, okay? And I use the 50 moving average, okay? You'll always hear me talk about the 50. So how do you find the moving average? You're gonna go over here to FX and you're gonna type in moving, and then you're gonna see average exponential, okay? Click there, all right? When you click on it, you're going to have to come to settings, all right? And you can make your moving averages any color. I like this shade of blue here, and I'm gonna make mine a little bit more thick, all right? And then I'm going to change the length where it says inputs to 50, okay? And you don't have to change anything else, okay? Just change this to 50, okay? And then style, you decide what color you want to choose, the opacity and the thickness, that's up to you. Hit okay, all right? When you want to hide your moving average, you can just hide it here, okay? Boom, keep it like that. So let's look at this moving average. So one of the things I teach is that this moving average is like one big zone, and it also plays as support and resistance, right? And it also shows you the trend. So the 50 moving average moves back 50 candlesticks and gives you the average of that trend, okay? And it's very accurate, all right? So we can see here when we're above the moving average, we're looking for buying opportunities, okay? When we're below, we're looking for selling opportunities. I personally don't trade. Come on now. When the MA is, when the candlesticks, sorry, are sitting on the MA. Sitting on or moving through, okay? Which will represent to me consolidation, right? Which is our sideways movement. All right, so this is what it is for me. All right, so let's look at it. So right here, I wouldn't trade this, okay? This is consolidation. This is a range in market. This market is moving sideways, and this MA is moving through the candles. I wouldn't trade this. This is just another confirmation of sideways movement, and you don't want to trade that, okay? You're going to get whipsawed back and forth with price. But here, when price bounced off of the moving average, right? So this is bullish momentum. Now you have buying opportunities here, right? So when we talk about market structure, you had an opportunity to buy here, okay, when it returns every time it pulls back. All right, then we had a range, right, of consolidation. It broke through, retested. Now, when it's below the MA, now you have bearish momentum. Now you have selling opportunities, okay, even when it pulled back. All right. Now, a lot of the time people ask me like, Coach Max, how do you know when to hold a trade? And a lot of the times it's my moving average. So this one in particular, price stayed below this moving average for 183 pips, right? So as long as price is rallying below, that's allowing you to know that, okay, I can stay within that cell. Let's look at another swing here. So look at this, above the MA, again, bullish momentum. Look at this, guys. It was bullish for how long? Let's see. It stayed bullish for 200 pips, all right? When it was below here, you guys can clearly see this blue line. When we're below, we're looking for sales. This was a nice, beautiful trend. This would have been a swing trade for sure. Okay, look at this right here, guys. I have to zoom out. Like, wow, look at this. So from here to here, okay, there was no reason for you to get out this trade. This is now showing you how long did this take? Hold on, guys. This was a swing trade now. This was 20 days, okay, 611 pips, okay? That's a very big move, all right? It helps you to see over this period of time, like literally you could have bought all the way up, okay? All the way up. Look how many times that this gave you an opportunity to actually buy on each and every single pullback, guys. Look, every single last one of them, right? Until structure broke up here, right? Price didn't continue. So moving averages are super accurate, okay? Super accurate. When you look at different time frames, now I specifically use the 50, okay? The 50 has been working for me for years, but I'm gonna go ahead and delete and hide this, right? But you can use other moving averages. You can use a moving average cross, right? So let's look at the Candlestick Bible really quickly. The Candlestick Bible gives you a few different ways to use it. So when you look at the content, the table of contents, you're going to see okay, let's look at it. You're going to see down here now, what page? Right here, trading with the moving averages, page 117. So let's go there. All right. So this one gives you, you know, showing you how to trade the engulfing moving average, how to trade with it, right? So, you know, it's telling you how to find moving averages in different ways. It's showing you, you know, talking about the 200 simple. I already talked about that, which is the overall trend, all right? And so it shows you a simple strategy of using the 21 and the 8 simple, okay, in the daily and a 4-hour time frame. So it's showing you basically when you see these candlestick patterns bouncing off of the moving average, now you have an opportunity to buy long term, right? So it's really showing you the difference. This is in a downtrend. It's showing you when these candlestick patterns literally pop up when the moving averages cross. Okay, so look at this in the market. Let's just use the 200, and I'm also going to add the yeah, I'm gonna add the 200 and we're gonna keep the 50. So let's make this 200. And let me see. You choose a color that you guys can see. Green and blue kind of look the same. So let's use this color right here. All right, because y'all can see that. Right, so the 200 is red and the 50, okay, is blue. Let's go to a higher time frame here. Let's go to higher time frame. Okay, so this is the 4-hour time frame. Now we're talking about big swings, right? Bigger moves. So look at this. When the red and the blue cross, when the blue crossed over the red, okay, the 200 over the 50, this is now showing you a clean uptrend. Okay, so when you combine the moving average with candlestick patterns and, you know, the price action, your market structure, and all of the things that you've been learning inside the Epic University course, right now you're seeing the overall move, guys. Look at this. This is like insane. It's like over 1,000 pips, really. Right now, look, the moving averages right now at current price is turning around, it looks like, for a long-term drop, long-term sell, right? Let's look in the past for a second, right here. Look, okay, when the blue crossed over the red going down, guys, look at this, right? Look right at the cross to right here, 300 and something pips. A lot of traders use the cross as a confirmation, right at the point in which it crossed. Okay, you can see that. All right, so you can kind of see in the market how you can use moving average crosses as a pattern, right, as a strategy that you can use to trade, right? It's just another confirmation. You can use different numbers, okay, for your moving averages, but the thing is, when you're on different time frames, right, 200 is a big number, so that will be used for like a higher time frame. 50 is typically used for like intraday and scalping, and you can use smaller numbers on the lower time frame. So for like, if I was looking for moving average crosses on the 15-minute, I would use something like, you know, the 50 and, you know, maybe the, let's see, you know, something smaller than 50, like 10 or 20, right? So that it's closer because this time frame is shorter, okay? And you can see it here, right? That we were in a downtrend. So if you were scalping this market, look, when the two crossed, look, that still was good pips, okay? So you just want to practice and find what works for you for your trading style, and you can obviously do your research on moving averages and how to use them. You can come read the Candlestick Bible and see how it is used on a higher time frame, and potentially use this strategy in your trading style, okay, in your trading plan. All right, I hope that this video helps you guys.